Friends, in this video for ITHOUGHTWEALTH, I'm going to talk to you on the topic, the trade in public sector banks. A lot of people are still pinching themselves looking at this massive trade in public sector banks. During the first wave of COVID, there were doomsayers in the market who believed that most public sector banks would go bust and that the government had nothing in its arsenal to stop that. The gross NPAs were very high. The companies were coming towards the lower end of their capital adequacy ratio. There was no light at the end of the tunnel. Pessimism was very high. Consensus was that you should sell and get out of anything which had three words in it: public sector bank. So that was the sentiment. From there, it has been quite a roller coaster journey for those who believed that these banks would also come back. For those who took an egoistic stance that these banks should never be even looked at, it has been quite a humiliating ride, because the companies which they believed would do exceptionally well have actually done nothing or marginally gone down from their all-time highs. So, this public sector bank trade has been a revelation. It has been a huge success for many. It has been humiliating for quite a few who took the other side, and it is still probably going to go for some more distance. Now, why do I say this? You look at the progression. First, both the gross NPAs and the net NPAs started to come down. They have come down significantly since the beginning of COVID-1. Capital adequacy has also gone up, which means that the banks which were not in a mood to lend can now go for growth and lend. You are seeing rating upgrades significantly rise, as this image will tell you. So have a look at what CRISIL says on rating upgrades. This is from Twitter, from a friend's timeline. Also, we are seeing credit growth accelerate faster than deposit growth. This is very, very interesting, because when this happens, pricing power also comes back to the banks, and if they are judicious in lending, then that growth they are going to get going forward could be better and more profitable than their past performance. Overall, all the heavy lifting, all the difficult work done by the public banks during COVID will help, and it will translate into significant performance going forward. Now, is all this already captured in the price? That's debatable. It's left to you to make the judgment. The book value of State Bank of India is 342. The stock is trading at 612. It's 1.77 times, which is not cheap if you compare historically. But in previous bull runs, we have seen the SBI price to book going much higher. And it remains to be seen if market will show that confidence on SBI. If market shows that confidence on SBI, some amount of that glory will also reflect and shine on other public sector banks, especially the top 2 or 3 big ones. As for the smaller banks, consolidation is the way forward. We will see these banks amalgamate or get sold. They are not going to be in the same place as they are. Yes, there will be a lot of local sentiments associated with many of these banks because they are headquartered in different parts of the country, and taking them out and putting them as part of a bigger entity would probably change the historic relevance and the character of these banks. A lot of sentiments are bound to be expressed, but I think the government will do whatever it thinks is right. For starters, IDBI Bank is getting sold, and we should see who buys that. Consortiums are being formed. Unlike the earlier sale of banks which happened to another bank, which is either MNC bank or some other bank, it's quite likely that this bank could go to foreign investors who form a clique and buy them. So it's going to be very, very interesting to see how global investors get together to buy an Indian bank, because that is something that would never have been predicted just a few years back, but it's all happening out there. And once the government sells one bank, I expect them to come up with sale of more banks which are not really in the scheme of their plan for the future of public sector banks. So the marginal banks will all get sold, and we should see who are all going to come in and buy them. The Indian NBFCs were also believed to be potential buyers of banks, but we are not seeing a strong commentary come from them. Nobody has so far expressed public keenness to buy a public sector bank. So that is something that we need to see, and we are not sure how many of our large NBFCs would be interested to buy a PSB. So overall, the trade has played very well till now, and it looks like there is some steam left given the place in the credit cycle where we are in, the upgrades of credit ratings and the growth in credit which we are seeing. There's still a long way to go and it's still early days, but the fact that the trade has come to where it is itself creditworthy. Those investors who believed in them, which is a very small section, have definitely much to cheer, and those who have missed them will still be waiting for an opportunity to get in. So that's where the PSU bank trade is, and it's very interestingly poised, and we have to see where it goes from here. Thank you for watching this video.